All right, welcome to another episode from the Chart Readers. It's been a while since I've made the meme sector review, so obviously with GameStop doing well, there's a good amount of reason to look at these, right? I think it's important to keep things in perspective. I don't think Game did as great as it looks on paper. Obviously, a big double-digit day for GameStop, right? But I think the way AMC, the way Ape, the way Carvana just reacted kind of shows, in my opinion, that the meme sector isn't going to lift just because GameStop dropped some decent earnings. And I'll be honest, I didn't really look at the earnings. All I kind of saw was, I think, profitability, right? But nonetheless, just keeping things realistic is the goal here, not being some like rah-rah fanboy, because you end up losing a lot of money following those people, all right? That said, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how things are setting up. We have our 5 moving averages, these horizontal support and resistance lines that I do draw manually myself. And then when we're done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can please like, share, subscribe, whatever, comment. I mean, it all helps a lot, but even if you do nothing, honestly, just thank you so much for watching these, all right? And then look, I am not perfect. I am not all-knowing. I definitely get things wrong. And yeah, if your opinion's better than mine, I'd love to hear it, okay? This is not financial advice. We are simply educated people just sharing our thoughts, okay? So look, let's get into it. And the first thing I want to talk about on this is actually not even on the charts. It's just a general comment I always make. Look, I hate looking at after hours and pre-market movement. I think it's just such an easy way to get your hand stuck in the cookie jar because the two things. One, the rules are different, all right? And people know that, and I think people play differently in those two windows of time. The second thing is actually the volume is substantially lower and the candle movements are way different. I think I'm gonna mess up my view. We're going to try to do this together. I'm going to go into show post market. I'm going to go into the minute and we're just going to zoom out real quick, okay? So where's my post market? You can see it all. I got to zoom in just a little bit. I got to zoom in just a little bit. All that happens after hours because look, this is 4 p.m. before markets opened, right? And then all of a sudden, we're now on the next day and we're up here, right? So all this, I don't know why it's not showing at me. You can obviously see we're looking at the after hours movement right here, right? But this thing pops. I came back to regular hours because I only look at regular hours when I do my charting, okay? This thing pops 22% in the morning and very, very, very much was a fool out for sure. Obviously, it's so easy to see now that, you go from 22 to 6, right? But man, I'll be honest, this set off my alert, right? And when I saw it, there were two things that crossed my mind. The first one was, man, we just gapped all these moving averages, right? Are we about to run to the 200? Because that's how it should work, right? If you skip all those, you should come here. The second thing was, man, we just cracked this 1009, right? Does that mean we're at least going to try to come maybe even to the 13 number, right? I woke up with the what should I do? Honestly, I bought a little bit. I did buy a little bit up here and I got a little greedy. I jumped out, knock on wood, but like it happens, right? And you got to be really careful about after hours and pre-market because for real, you can go as you see it from a 22-25% start to a 6% end, and that's over a 15% loss, give or take, right? So it's dangerous. It's a cookie jar hand stuck moment, all right? So just keep that in mind. Again, what are we looking at? Look, we actually, though we closed here, we just broke 2 moving averages, okay? I know it's a big red candle. It doesn't seem like it, right? But we were down here. We go over these 2, and now we're here, right? So the question really is going to be, are we going to use these 2 to bounce up, or are these 2 actually fake, and we're about to drop maybe back to the 8, right? So as I zoom out, look, good things happen over the 8 and the 20, bad things happen under the 8 and the 20. There seems to be a little bit of a curve happening, but again, we need to really prove that we've taken the 8, right? And I think proving that we've taken the 8 goes from when you're just like this to actually bouncing on it. And I think what I would at least love to see. Look, I would love to see us hit these two and basically go up tomorrow from here. I wouldn't be too mad. Again, I have no money in here, right? So I really wouldn't be mad. But I wouldn't be too mad if we came down to 750 and then bounced up again. Because you know what? That'll actually make me believe, hey, maybe we're actually starting to take back the 8 moving average. Because it's been a pretty long time since we haven't had the 8 moving average, and you can see the devastation on it. One more time, I actually just noticed it as I was talking. All we're actually doing is going oscillating up and down on this blue line, this 100 moving average, right? We try to break it here, we don't, we kind of just stick with this little oscillation thing, right? So I also wouldn't be too surprised if we just kind of keep oscillating across it until a real move is made, right? But yeah, Carvana, I think there's still a lot that needs to happen to really prove itself. You know what I mean? Obviously, breaking the 50 with some confirmation would be great because, yeah, that's a nice gap up to the 200, right? But you know I hate moving clusters. This is definitely 4 of 5 lines. That's a pretty big cluster right there. Anything can happen in this thing, right? And again, I think keep watching this 100 because the 100 was going down super steep. It's kind of starting to not necessarily curve up, but at least calm down a little bit, right? So I think if we can see some lines start to curve up, that's what'll really make me start to believe. But look at the way that it would happen. It's probably not going to happen until next week, in all honesty, right? So just kind of be realistic with expectations. Let's just look at volume real quick. Volume's not too bad. We didn't have the like silly numbers. Don't get me wrong. We were at 17, at 9, and then go up to 40. So in a lot of ways, we do 4x it right there. It doesn't look like it, but yeah, I guess that is a pretty big one. If tomorrow can break 42 million, hopefully it can. I would hate to come back down to this 13 million, 14 million range though. That's going to be a bad drop down, and if that happens, we're for sure coming here. But really, I think I'm going to look for the 8 moving average to kind of dictate what happens here. I'm not going to spend too much time here. I don't think a lot of people care about Vroom as much, but I like to look at Vroom when Carvana moves. Look, same thing I'm going to say. Nothing but bad under 8 and 20, and just a lot of going oscillating on these 5 moving average lines. So yeah, as I look at this, honestly, I don't even want to talk too much here. Yeah, maybe if it broke the 20 today, it would have been a little bit different of a story. It actually did pretty well over the 8. Maybe it bounces on the 8 too, but yeah, nah. Maybe if anything, at least it's worth maybe setting an alert for like 94 cents if you care about this. And then, you know, from here, 104, and then there. Yeah, I'm not going to spend too much time on Vroom here. Sorry. Mullen. All right, let's take a look at Mullen. And look, I'm less here to talk about the technicals because there's not too much to talk about. But look, I've said it so many times. When you lose the all-time low support, all you can expect is a black vortex, this black hole that just sucks all your money away. We're close to losing 50%, sorry, 50% since dropping it, right? I generally say I'm ready for it to lose 20%. Once it loses that, I'm ready for it to lose another 20%. Once it loses that, I'm ready for it. You know what I mean? Like, it really becomes this never-ending drop cycle on this thing. And look, Mullen isn't what it used to be. You really gotta take that in. Look, I was super bullish up in this 40-cent realm, right? I thought we were gonna break it here. I thought we were gonna break it here. I thought we were gonna break it here. We never did, and I very much gave up, right? I'm not here to be a rah-rah supporter. I'm not here to just like keep my money in here and wait, right? Like, that's not how I play my game. From there, again, you heard me say that bad things happen under the 8 and the 20. Very, very bad things happen when you lose that all-time lows number. And look, again, this 20-cent number, you see it hit right there, and then never again, right? All you have is just this black hole of nothing. There's nowhere for me to draw support anywhere, right? It's just down, down, down. So all-time lows, I hope you use this as a learning experience, honestly. All-time lows is bad. I know it seems like, hey, we have to be close to the bottom, right? It's never going to be this low again. But again, you can see it. We're almost at a 50% loss just since we lost this, let alone since this 40-cent line when things looked good, right? So You know, I'm not here to be a hater. I'm not here to like rub it in or anything like that. Use this as a learning experience, right? Like that, I'm telling you, you have a lifetime to trade. Learn from this. Don't trade under all-time lows. Find yourself in all-time highs with the two lines, the green and the orange one going up, 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 right? I mean, it's a much better thing for your money. So, yeah, a little more of like a lessons learned here. And again, I'm not being a hater, but for real, I just want you to know that there's no reason not to expect it. And for real, there is absolutely no reason for us to not think it can't get worse. Look at this candle, right? It looked like, hey, maybe we're going to try to get back to the 8 moving average. Nah, we're just going to keep going much, much, much further from it, right? These two lines aren't even anywhere near each other, right? Like, look, when they go down, you need these like, are they going to come back together moments, and then they kind of get worse. They need to come back together before they're going to cross each other, right? That's just basic line stuff. So the fact that they're just so apart is not good at all, and the fact that the candle keeps going lower and away from it is not good at all. I'm not saying that this is going to go to zero, but there's definitely 11 more cents this thing can lose, and then in that 1 cent, that's where you start going into that fourth decimal, right? So be careful. That's really all I'm saying, okay? Hey, I appreciate your time so much. More videos are coming.